Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. They say generally dollar index and 10-year US Treasury yield move in the same direction. If you see the chart, there is a positive correlation between both of them because of dollar safe haven status. Now, if we see the chart, we will be able to observe that there is a divergence between dollar index and 10-year treasury yield, where dollar index has fallen and 10-year treasury yields have moved up. In this presentation, we are going to understand why this has happened first, second, what impact it is going to have on different asset classes, and finally, outlook on dollar rupee pair. Now let us understand why is there a divergence. So basically, it started with Trump tariff announcement, because of which economic activity became uncertain. Then inflation expectation become higher, and markets started anticipating that Fed is going to cut rates at a lesser frequency as they were presenting 6 months back. Because of which the market stance was that Fed is going for higher for longer stance, and because of which the yield started moving up. And the second reason why yields have started moving up is rising fiscal concern for US economy. If we have noticed that Moody's have downgraded US credit rating. In Moody's report, they were projecting three kind of data point. First, they are expecting fiscal deficit of US to move from 6.2% to 9% by 2035. Second, they are expecting that debt to GDP ratio will move from 124% towards 134%. Third, interest payment will become 30% of Federal Reserve revenue, which is currently close to 18%. This created negativity and yields started moving higher. And the last reason was weaker demand on bond auction. Last week, US Treasury wanted to raise $16 billion worth money by issuing bond of 20 years. Generally, if you see in previous two transactions, they were able to raise money at a lower interest rate of 4.81% and 4.83%. In order to raise the same amount of money, they had to pay an interest rate of 5.04%, which is technically increase of 4.93%. Now, this was the reason why yields have moved up. Now, let us understand what is the outlook on 10-year yield, dollar index, and US equity market. So, for 10-year yield, we are expecting that from a current level of 4.50, 4.3 is going to act as a very strong support, and the biasness is that it is going to move higher towards 4.70 level and 4.80 levels. Dollar index, which is currently trading near 99.10 kind of a level, as we have discussed in all our videos of 2025, that the major trend in dollar index is on a downward trajectory. For near term, 100.50 and 101.20 is going to act as a strong resistance for dollar index, but the broader view remains the same. The dollar is eventually going to move towards 97 and a half kind of levels. Now, let us understand what is the outlook on US equity market. Rising fiscal deficit, lower consumer confidence, higher inflation expectation, and policy uncertainty are the perfect recipe for equity markets to underperform. So broadly, we are expecting that S&P 500, which is currently trading near 5,800 levels, will face strong resistance near 5,950 levels, and eventually it is likely to move towards 5,500 and 5,300 levels. Now let us discuss the outlook on rupee. For rupee, there are a lot of positive factors. First, if we see dollar index is under pressure, so which is a positive sign for all Asian currencies and rupee. We have been able to see that a lot of Asian currencies like Japanese currency, Chinese currency, Singapore dollar all are getting stronger. Third, crude is on our side, it is not moving higher. Lastly, RBI announced a massive dividend to the government. They have increased their dividend by 27%, which is going to help the government in managing its fiscal deficit. So there are a lot of positive factors. जैसे कॉइन के दो साइड होते हैं, वैसे ही there are some negative aspect also. First negative aspect can be rising 10-year US yield. If yield continues to move higher, we can see some amount of money getting absorbed from Indian equity market as well as debt market. Now the second point is debt outflow. As we have discussed that yields are moving higher, it can have a negative impacts on our debt market also. So FIIs have withdrawn close to $1.5 billion in the month of May from the debt market. Third negative aspect can be RBI might start buying dollars near 84.50 or 84.80 levels, as RBI is still holding a net sell position of close to 84 billion in its balance sheet. Now let us understand what does dollar rupee chart is suggesting us. If we see dollar rupee chart, we will observe that after making a high of 87.96 in the month of February 2025, dollar rupee pair is trading in a downward trajectory, and it is giving us a clear cut indication that every uptick should be used as an opportunity by an exporter to increase their hedge ratio, and importers should only focus on covering their near-term imports. So in the near term, 85.50 and 86.10 is going to act as a very strong resistance, and ideally the pair should move towards 84.80 and 84.50 in coming days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.